Hello and welcome back to FUD TV. If you're new to this channel, my name's Elio Trades and I do daily cryptocurrency instructional videos just like this one each and every day on this channel. Today we're going to be talking about 5 mistakes that are very common for newbie or new investors in the space to make. Even if you do commit some of these common newbie sins, just know it's okay as long as you learn from it, grow, and continue to improve your investment style. So without further ado, let's get to it. These are the 5 mistakes that are most common for newbie investors. First and foremost, we have to address FOMO. Now, this isn't just a mistake for a newbie investor. This is a mistake for all investors. But FOMO is particularly strong in the newbie. The reason is because you just don't realize that these market surges, these bull runs are common and they run in cycles. For every enormous bull run, there's also somewhat of a correction or a crash, a pullback. Nothing is just 100% up or 100% down. You also have to remember that things are manipulable in cryptocurrency, meaning that one big player can sometimes drive a price up by a huge percentage, and this pretty much creates false chart action or charts that aren't really reliable because they're showing you a ton of interest that may or may not actually reflect the real buyer interest. The point is, by FOMOing in, by getting emotional, by fearing that you're going to miss out on something and investing your money because you're so excited and you just don't want to miss the opportunity, that is one of the primary mistakes that you're going to make as a newbie investor. The second biggest newbie mistake is relying on secondhand research. Now, this is tough because obviously as a newcomer to the space, it's really hard to start researching properly the technology and teams and projects in the space. No matter how good the resource, relying on secondhand research as a primary means for your investments is the surefire way to end up confused and in a bad situation. Even if you have the most reliable and honest resource in the world, like some Twitter account that you follow and they're always right, they're always honest, they're always true, but guess what? Maybe that Twitter account gets hacked and then they put out some false pump. They pump some coin that's not actually a good coin, and then you end up investing into something because you're relying on the secondhand research. If you were doing your own research, you'd be able to verify information, validate. Is that in this industry, information is truly power. So learning to do your own research, DYOR, is something you're going to see everywhere, on Reddit, on Twitter. The reason is because it's so important. If you're not able to discern for yourself whether things, facts are valid, news events make sense, whether pumps seem like they're organic or whether they're manipulated, you'll never be able to make sensible decisions in the market. This secondhand research reliance is a huge error, but it's almost unavoidable for newbies. When you do find a project you like, investigate their team, investigate their technology, investigate their roadmap, read their white paper, look at any documentation they have out, read anything that they have out, even if it's extensive. And if they've published something for investors, then you should be reading it because that's what you're doing. You're investing. Please also remember that smart people can disagree. 2 very experienced and intelligent people can disagree about projects, and that nobody, not a single person in the entirety of cryptocurrency can tell you exactly what's going to happen in the market over the next week or 2 weeks or 3 weeks. So while some secondhand research can be incredibly useful at helping you gain a deeper understanding or an introductory understanding of a topic, before you actually throw your money in and invest, you need to learn to dig in and understand these things for yourself.
Let me tell you guys that I started 137 days ago with only $25,610. And right now I am reaching $140,000. What?
The third thing that's so easy for newbie investors to get sucked up into is the whole Ponzi scheme racket. If any place tells you that they can guaranteed return you money, then that is for sure a warning sign that you're dealing with a scam. There's not a single legitimate project that's ever been created that promises returns to its investors. The promises of returns to its investors are the fundamentals of the team, the technology, and the vision. That's the promise to investors. Saying that will give you 1% daily for putting your money down, that is a scam. This is actually more common than you could ever imagine. So common that it's gotten even veteran, very experienced investors to consider throwing a few bucks in. And if you're gonna go down that route of investing in something that seems a bit wishy-washy, don't put a lot of money in. Put only the money in that you could see go poof. Because in my experience, personal experience, it will go poof. Also, another huge sticking point here is scams. If you've been on Twitter for more than 10 seconds, you know that under every post is a scam post essentially trying to sucker people in to clicking on a link and sending Bitcoin somewhere. This is just another stupid pyramid scheme where if you put money in one side, you get more money out the other side. That's not the way the real world works. That's not the way crypto works. So stop trying to get rich quick. Stop trying to look for easy ways to make money. And if you're a newbie investor in the space and someone tells you that you're guaranteed going to make more money than you put in, then you should guaranteed walk away. Now, I'm sure you guys have heard of Hotaling or Hotaling. In fact, there's a whole culture behind hodling or holding onto your coins essentially through these market fluctuations.
Wreck about to go and join the hodl gang. Hodl gang, hodl gang, hodl gang.
Most traditional stock markets that experience a 75% correction, most stocks in that position wouldn't bounce back. It would take them years, if ever, for them to bounce back. Crypto, however, is a different paradigm, focusing more on adoption of technology and less on the building of sort of traditional enterprise. For that reason, this technology can spread and balloon really quickly, and it can shrink really quickly in its speculative value especially. So panic selling, meaning feeling like you're going to lose all your money and just getting rid of your coins whenever it goes like this, is really a bad newbie error. Now, I'm not saying that all coins are good, and I'm not saying that all dips will recover. That's certainly not the case. However, if you do your research and you really have done a ton of fundamental analysis and you invest in coins that have strong histories, well, none of those coins have died yet. And cryptocurrency has a history of bouncing back from what would be otherwise devastating crashes. The age-old expression is one Bitcoin is always worth one Bitcoin, meaning even if Bitcoin dives down to less than $1,000 and you hold on to it, you still have as many Bitcoin as you did when you started the process. So if Bitcoin goes back up, then you'll still be where you were. But if you panic sell at the bottom, you panic sell at the dip, that's how you truly lose a lot of money, and you can't undo that. If this was a real devastating crash like we saw in January and February, when the surge really kicks back up, you're not gonna get those prices again. Those prices are gone. I'm sure you guys have heard the expression, buy the dip. In cryptocurrency, it's so counterintuitive, but you really wanna buy when things are crashing. That's when you get the good price, and that's when things are really set to really rebound and go up. In the end, selling at the bottom of the dip is the worst thing that you could do in cryptocurrency. But the reality is that if it's a remotely decent project and you panic sell during a dip, you've most likely taken a lot of money off the table. Finally, I want to encourage you new investors to not obsess over crypto. When I first got into this industry, I was literally checking cryptocurrency charts 26 hours a day. I couldn't sleep. I was just up all the time. I was into it all the time. And it caused me to overanalyze, to overspeculate, to second guess myself. And you know what I did? I sold good positions. I freaked out. It caused way more anxiety. I overlooked at things, and I ended up losing money. When you obsess over crypto, you put yourself in a state of semi-panic, and you end up getting this adrenaline rush. Whenever you look at your coins, you end up feeling like you gotta do something. That's not the case. What you need to do is a lot of work before you invest, so that as crypto goes like this or whatever, and you know it will, you won't have to be in your phone all day freaking out. Because if you're like that, you're not gonna be able to live a humane life, and most likely, you're not gonna make a lot of money. You're gonna end up selling at the lows out of panic. You're gonna end up missing the big gain days because you've traded or tethered or you tried to do too much. In the end, investing into good coins early on and letting them grow up in value is the best way to handle your cryptocurrency investments. If you're a new investor in cryptocurrency, we hope these videos have benefited you and that you've learned a little bit of what you could possibly avoid at the beginning of your journey here. If you've made some of these mistakes already, don't feel bad as long as you learn from them. My name's Elio Trades, and we make videos each and every day like this on FUD TV. If you enjoyed this content, go ahead and subscribe and hit that bell notification so you're made aware whenever we put out content, as we strive to bring you the best information in the cryptocurrency space. If you have any questions about this video, don't be afraid. Ask in the questions section below. We'll try to get to it, or one of our community members will step in and try to answer your question. It's been an absolute pleasure having you with me today on FUD TV, and I'll catch you very soon on the next episode.